Okay, everybody, welcome back to the Goat Rodeo podcast. I'm your regular co-host, Garrett Smith, joined by Simon Kuhn and the returned from the wilderness, Dave Cottle. Welcome back, Dave. We welcome to the podcast a first-timer and hopefully recurring fourth-wheel guest co-host, Garrett Asta from Houlihan Lokey, one of the major players in the aerospace and defense M&A investment banking market. We welcome him to the pod as a true expert, whereas the three others of us are raw dilettantes. I got to say, though, I just came back from lunch with my son, which we do every week. And it's hot here in southwestern Montana. You know, not hot. I know that I'm talking to some East Coasters who know hot.
Yeah, no, it's very, I was there Friday. It's very nice.
I know. It's very nice here. I know. I'm a northern latitude, Scandinavian extraction guy. Like, so hot for me is a different hot.
Hell itself in Southeast America.
Yeah. See, this is why I live up here. But anyway, it's somewhere around, high 80s here. It's sunny. Nobody has air conditioning in buildings or in houses in Montana, because why would you? I made the dire mistake of eating a full bowl of steaming hot miso ramen. And so, I've got an internal temp that's pushing 104 right now. I don't know if the sweat is visible, but gosh, I could really use an ice cold rip it. I could really use an ice cold.
Look, I don't want to derail my second rip it conversation of the day, but I am shocked to find out that there's miso ramen in Bozeman. Who knew? I've been to Bozeman many times in the last decade. I know they made it to ramen.
Bozeman, Montana has a shockingly good, although small, Asian food scene. It doesn't make sense because everybody in town is
it's definitely a recent come up, because Dave's Sushi was the only sushi spot in town for a very long time. It was just Dave's.
Oh yeah, I don't want to shit talk a local restaurant here, but the Dave's Sushi is on notice. They've killed 2 people in the past couple of years with bad ingredients. This is why you don't want to go to the middle of the country for sushi. This is
a little bit of a thing.
Also, in the case that I'm wrong, I will apologize just so that I don't find myself in litigious hot water with Dave's Sushi if in fact I got that story wrong. But anyhow, I'm sure there wasn't malice or intent, Dave's Sushi. But those were the news stories. I'm sorry. That's the fact of it. All right. I have now talked entirely too long. Before we get into maybe a little bit of top of show stuff, Garrett, you want to do a quick intro for yourself, just to let everybody know who you are, who Houlihan Lokey is, where you sit in the industry, and why we should care at all what you have to say.
Sure. Yeah, maybe I won't dwell too long on the last question there, but Garrett Asta, I'm a director at Houlihan Lokey, which is an investment bank that focuses on a variety of industries, but where we've got a lot of critical mass is in the aerospace, defense, and government arena, which is where I spend all of my time. So we spend a lot of time with businesses at a bunch of different phases of their lives, really helping them through a number of strategic decisions around capital raising, whether that's equity, debt, or ultimately liquidity events such as sales or full exits of the business. And so we've had the opportunity to work with companies over a long range of cycles, including the most recent defense tech blow up, I guess, which has been a lot of fun. So excited to talk about it.
Yeah, we'll get into maybe some more topical content in a little bit. I think it actually will be incredibly useful for our audience to hear maybe from the so-called horse's mouth what this market is doing right now. Sorry, you're a horse in the most positive way possible.
Yeah.
I think I'd be remiss not to welcome Dave back from the trenches of the U.S. Army Guard field training events. He's a reserve or a guard officer, sort of like I'm a reserve officer in the Marines. And I made note when he came on camera today that he has a beautiful Army regulation haircut. I just admire that. Thank you for keeping the sideburn game strong, Dave. It's beautiful. Simon and I, if we'd showed up in any of our previous commands with sideburns like that, what would have happened, Simon?
Well, I never made it past sergeant. So I want to make it clear that the other 2 members of the podcast team are lieutenant colonels. I imagine they would be very different conversations based off of what time in careers those sideburns would appear. So there's no scenario where I get to show up with sideburns. There's no conversation either. conversing is not what I would call what would happen to
It might have been
Sergeant
instant.
Kuhn.
Might have been instant death for like a Lance Corporal.
Yeah, they would have
Smith or a
lasered
Lance
them
Corporal.
off my face with anger. It was just the general emotion of disdain from my senior enlisted leaders would have obliterated every follicle on my face.
We looked longingly over the channel at Navy regulation haircuts and like drooled over those. And that's a step below where the Army sideburn gets nowadays. So Dave, anyway, defend yourself. Go ahead.
I wouldn't necessarily call this regulation. I would call it I'd call it passive.
Guard
Lieutenant Colonel in the National Guard regulation is what I would call it.
Yeah. Good for you, man.
I think it's okay to just present a clean professional appearance and then not look like a 19-year-old private when you get back to your full-time job. I think it's okay.
Not me. Screaming Eagles across the board. Remind everyone why we're here. Let's go.
All right. So in the past week or two, just to like reorient us onto meaningful content, to segue us into like real conversation here in the pod, we got in our obligatory rip it, plea for a sponsorship. I'll note. So I saw the other day New York Times article. I think it was a New York Times piece. Maybe it was somewhere else that the U.S. was potentially positioning. I don't think there was definitive like press release content about this, but positioning strategic nuclear submarine assets elsewhere, potentially in response to or as an escalation in the context of, strategic, adversaries and positioning vis-a-vis Russia, China, et cetera, et cetera. And then in the past few days, there was a combined exercise, a Chinese-Russian combined exercise that had as one of its many exercise outcomes the sinking or destruction of a, quote, enemy, close quote, in parentheses, American submarine asset. And I found this to be interesting, especially because Steve Witkoff, the president's negotiator weapon of choice, was in Moscow recently. And there seems to be a bunch of kind of negotiating levers on either side of this geostrategic kind of, chessboard being pulled, to mix metaphors. And I wonder what we make of all that. Last week we talked about a Chinese pacing threat in space, in the space domain, but maybe a little bit closer to home, we're talking about strategic naval assets, and I wonder what the trickle down effects are in our industry.
So the first thing I want to touch on, which is pure nonsense, but the Russian-Chinese strategic partnership is referred to as, quote, a no-limit strategic partnership.
Yeah.
And as a person who, as a 12-year-old, considered himself something of a no-limit soldier in Master P's army, I'm really glad that that's coming back into the parlance. So hat tip there. Otherwise, this is much ado about nothing. Telling people where your submarines are is the funniest geopolitical flex, because we didn't build submarines that can travel underwater for hundreds of days at a time for them not to do that. They're already there. What do you mean our nuclear submarine that can stay submerged for 90? It's everywhere. That's the point. It's hard for me to get up in arms around it. Like, China and Russia did not put a drill together in 2 days. They were already going to do that. They're just doing a press release on stuff that they already had planned.
It might not even be real, right? I mean, it literally doesn't matter if it's real or not.
Yeah, fascinated to know what the Russian Navy capability even is in the deep Pacific. I'm like, we don't even have a warm water port. What are you talking about?
What do announcements like that? Does that reflect anywhere in the market, Garrett? Are you seeing that? Like, did those kind of like headlines or weird geopolitical kind of interactions and negotiations, whatever, are there any blips in general market activity? Do you see any of that? Yeah.
I mean, there's, I don't know, there's probably someone with an algo somewhere who made a buck off of it, but in aggregate, yes. In, specific circumstances, probably not.
Yeah.
I would say generally there are a building number of announcements around geopolitical events over the last, pick a time frame, year, 5 years, 10 years, that have been generally good for the defense stocks. But I can't say that this is one that would, really be on the radar of anything that's going to move the needle.
Well, something that who knows if this is moving the needle yet, or if it's simply a dynamic in the market that will eventually move needles. Last week we talked about space dominance and a space race for putting assets and capability into space, and we made the note that China has proclaimed that they are going to, 1000x their space presence, despite the fact that their space launch volume is not all that impressive. Maybe it's building a capacity, I don't know. Simon, before we hit record here, you called out, I think it was you, called out some recent activity around SpaceX and commercial space and launch volumes and something about California. Do you want to take the mic here and delve into that topic for us?
Yeah, so it's a little bit convoluted, but I think it's an interesting follow-up on what we talked about previously. The Coastal California Commission essentially rejected this proposal from SpaceX and from the Space Force to increase the number of launches at Vandenberg, and by increase I mean double. And they went to the courts and lost. Well, they neither lost nor won. They're going to redo the lawsuit now because of a judge who basically said he found no harm, but there might be political bias. So the whole thing boils down to the potential of political bias by California regulators against SpaceX.
Wait,
that's not even supposition. That's the court is saying. The court is saying, hey, we think there might be political bias here, which I commented about this before we're talking. This is what happens when you become inherently political as an organization. And I think SpaceX is probably the least political of any of the Musk affiliated entities, but it's still going to feel some level of this pain. I doubt SpaceX loses here because technically California cannot prevent the federal government from doing any launches. As long as the federal government is saying these are national security related, they go forward. However, it's SpaceX's commercial launches that become like the dicier ones. And you get into this argument of which ones are commercial, which ones are federal, yada, yada, yada. But it certainly is not going to be fun. I don't think SpaceX wants to be spending money on dealing with these like regulatory hurdles, which seem to be, and from where I'm sitting, really targeted. Like these are special regulations for SpaceX and nobody else, but there really is no other competitor trying to do it. So like, it just seems like a place you don't want to be for a burgeoning commercial space industry that, hey, I have the money, the resources, the capital to double. And they just say no.
Yeah, it's so
bizarre.
I am consistently confused by the behavior of California and California entities in terms of making their state friendly for business. Obviously, like they're riding a long wave of Silicon Valley and West Coast finance that has been delivering excellent living standards and everything else to California for now many, many decades and multiple generations. I don't understand why they would behave this way in general. Perhaps there's the political element that you're referencing, Simon, but like why disenfranchise major emerging commercial and cutting edge technology businesses and essentially push them elsewhere? Like why give that up? It just seems like California is shooting themselves in the foot here.
Yeah, and like, I mean, to this judge's point, it seems targeted. It feels very. I mean, they shut down the Tesla factory during COVID. Like there's an axe to grind, and I don't think it's a like conspiratorial axe to grind. I think it's just like the entirety of the California ruling class is like, nah, we don't like you. Not here. Yeah. What roadblock can I throw up? We've all like drawn our battle lines, and
well, I mean, I think to their detriment potentially. Yeah.
I think, and I think I'm right here. I think the commissioners and state lawmakers have actually cited Elon Musk's public political statements, suggesting that rejections are influenced by disagreement with Musk rather than purely the environmental issues. Right? I mean, this is.
It wouldn't surprise me.
I think this one's going to boil down politically to like the political retaliation question, undoubtedly.
Yeah.
But I think unlike Tesla, there's a much larger like national security implication here to SpaceX's business than there is to Tesla's business. So it could be much more dire like national blowback if SpaceX kind of gets kneecapped and commercial space is unnecessarily throttled.
Yeah, I mean, thankfully, they're just targeting a small and shrinking market, like space, right? I mean, so they've got that going for them.
Yeah. Dying market. It's going to obsolesce very soon. Yeah, that's right. Well, so maybe California is taking these actions, right? Like California is hobbling its own ability to participate in and enable and promote and probably benefit downstream from the burgeoning kind of reinvestment and revitalization of the space industry, or the emergence of a strong and growing space industry. But that doesn't mean that the space industry can't go elsewhere. So, like Garrett, before we started recording, you mentioned that this is simply a displacement of supply chain and business activities to other places in the country.
Yeah, that's right. There's no shortage of demand. And, if you think about launch, that's one element of it. But if you think about the industrial base, this supports everything that goes into and onto a vessel that's being launched. It's a lot easier to build around where that is ultimately going to be assembled and launched. And so you're seeing a big movement from the West Coast to the Southeast. And there are a number of businesses that are doubling or tripling in size over the next few years based on actions like this and based on a shift in the center of gravity. And so it's sort of an interesting dynamic in that a lot of these companies are not publicly traded, right? The big three launch groups are not yet on the public markets, but there is a massive shift in the industrial base around it that private equity and venture capital is noticing, and they are investing in those geographical areas.
Yeah, I mean, so I just to call a few areas out, I think like Texas and Florida obviously have like long-standing legacy space industry components. The major national space centers are there: Johnson Space Center, Cape Canaveral, and Melbourne Beach in Florida. But there are others. So I think before we started recording, we talked about Huntsville. I learned recently that it's often referred to as Rocket City. I don't know why, but I know there's a lot of defense and space R&D that happens there, certainly. And like, it's kind of a stealthy geography in terms of its contribution to defense and aerospace and space generally. Is that
more PhDs per capita than anywhere else?
I've heard that. I've heard that.
Yeah. More degreed engineers than anywhere else. I'm sitting actually in Huntsville today at the Space and Missile Defense Symposium, or I guess outside of it in a hotel room. But but yeah, it's this has been the busiest SMD symposium I've been to, and I've been going for probably a decade. So there's a lot of excitement around town.
I am by no means the expert here, but I was under the impression that part of the reason this is so problematic is because Vandenberg is not replaceable. That the type of orbits that they intend to launch for either national security reasons or otherwise cannot be done from Florida or Texas. It has to be done from California, like a technical reason why the sun synchronous orbits are, however, again, I'm not an expert. Whatever they intend to do has to be done from California.
We always hear about SpaceX. We almost never hear about Blue Origin. This is the Jeff Bezos Blue Origin outfit. Am I wrong to assume that a lot of that's happening in Washington State just because of the Bezos geographical connection? I don't know if that's true. Maybe Blue Origin really isn't a player here. I'm actually not really sure. Anyway, that's like yet another competitor in that launch space. But we know just from monitoring the venture capital, risk capital allocator community that space is a category that there's a lot of heat and froth in. Maybe we'll use that as a segue into the deal book segment of the conversation today. But you're engaging with SMBs in the space industry, Garrett, out there in Huntsville. Like, what's the talk around that forum for the venture-backed kind of upstart community? Obviously, SpaceX is a domination play in the launch business, but like, there's a lot of startup activity too. Is that featured at the symposium that you're at?
It is. I will say there are probably more venture-backed businesses this year than I've seen ever, and it's not a surprise. I mean, you look at Golden Dome and where that's likely to be run out of, it's likely to be Huntsville. And so there are a lot of companies that are going to be chasing that money. And it was, just all sorts of anecdotal measurements, but parking filled up early and bumped into more people than I have in a long time here. And so it's, you've got all the big players that you would expect the Andurils and the Epirises of the world. You've got the publicly traded companies, AV with their Blue Halo acquisition, and Blue Halo had a massive Huntsville presence.
Yeah.
KBR with their Cord acquisition had a big booth here. And then the Huntsville companies like i3 and Radiance were showing up in force, and so it was pretty busy. I'll head back over there later today, but it's probably been the busiest symposium I've been at.
Yeah, no doubt. I mean, we see a lot of that activity in portfolios that we're familiar with across the venture space. You mentioned the AV Blue Halo acquisition, which I think we talked about at one point in the podcast a number of months ago. That I think that actually was consummated earlier this year. It's probably too early for a lot of the space industry to be thinking about consolidation activity, but is that true? Is that not true? And maybe we could shift a little bit into that M&A segment of the conversation. What's going on that front?
So I would say if you expand defense to more of a national security envelope and talk about space and defense more broadly,
yep,
there's a lot of activity that really didn't exist. You had, I guess, the SPAC boom in the early 2020s. And so there were a lot of companies that were launched into the public markets. But in the last 18 months, you've had a lot of activity around names like Karman, AV, which we just talked about, Kratos, all doing follow-on offerings. You've got IPOs from companies like Voyager, Firefly just priced, and they're looking to IPO shortly. There are all sorts of names that are exercising the public markets in a way that they hadn't. And we hadn't really seen a whole lot of pure defense IPOs in a very long time, but there's been a lot more activity if you expand that to include space. And so a lot of those companies, while they are space forward in terms of what they're talking about to the market, they are very much looking to get into the defense market. So they're all now extremely well capitalized, publicly traded buyers of companies in the defense industry, which has been really exciting. As we've been bringing companies out to market, you've got the systems integrators of the world, you've got the primes getting back into the M&A market, you've got these newly emerged space and publicly traded defense tech companies or newly reinvigorated defense tech companies. And then you've got the venture capital backed and private equity backed businesses that are kind of sitting right behind them. And so you've got probably 30 new companies with $1 billion plus buying power that didn't exist 3 years ago or didn't have that buying power 3 years ago.
So what explains that? Is it buying power in the sense that they've got a new mandate? Is it capital is actually flowing into these areas so that they have the ability to go after things in the way that they couldn't before? There's some common talk tracks around the demise of the Lina Khan regime and the Democratic presidential administration and Democratic controlled Congress as like a marker for, okay, the IPO markets are back, M&A is back. What explains all of this?
Yeah,
from your perspective. Yeah.
I'll caveat this with I liked every single meme with Lina Khan that was connected to the Figma IPO.
Yes, so beautiful.
I don't really see that being the driving force. The biggest thing in my mind is really around the consolidation of buying activity and power from the government around revenue models that are extremely profitable for the right companies and have extremely strong tailwinds. And so if you think about an industry that had really centered around 6 to 10% margin work for a very long time with 3 to 5 year tails on work, largely services or lower margin product work, and then shift that to $1 of revenue now being worth $10 million or $15 million, or one company's case, $111 million worth of value, the whole value paradigm has shifted. And so venture capital has recognized that. They have been obviously pumping a lot of money into the industry. The private equity community recognized a lot of those trends probably 10 years earlier. I mean, we talk a lot about the venture capital activity in this sector, but there were over 150 private equity backed companies in the defense government sector.
Yeah.
You go back to the mid 90s, that was, I don't know, a dozen, 2 dozen. It was controlled by 3 PE groups.
Right.
So, there are a lot of things that have been progressively enhanced for the contracting community over the last pick a time frame, but between those dynamics and what I think is just an objective fact, which is the world is not going to ever get any safer. It seems to be a pretty safe place to park your money as an institutional investor.
Is there any, but first, I buy all of that. Is there any explanatory power in the idea that private equity and venture capital live in the same basic category? There's a spectrum there. Venture capital is essentially like the most risk tolerant version of private equity in some ways. I've noticed that some private equity groups are behaving a little bit more venture-y than maybe they would have in the past, but also there's a recognition that maybe the traditional SaaS-oriented venture model is not appropriate for aerospace and defense startups, because typically you're selling to a government customer or more complex, slower markets. And so like the maturation of an upstart play in that space is going to mature a lot more slowly. And so a liquidity timeline or an IPO or whatever is going to be a little bit slower, meaning that it doesn't match up with the 7 to 10 year spread on a traditional venture fund. So private equity is stepping into the gap. I mean, what do you think of that explanation? Is that useful?
Yeah, so I'd maybe start with the beginning of that question, which is, yes, they exist in the same universe. I would say they exist on a spectrum, and you can essentially boil it down to risk tolerance versus return expectations, which should and are correlated, right? So on the venture side, if you invest in 35 companies, there are power laws. There are 1 or 2 that will maybe return your fund, and hopefully there's 1 that gives you upside to that, and then the rest, not who cares, but they're not going to be impactful on your returns. Private equity, you'll make 10 investments out of a fund, and hopefully all of them will at least return the capital. Maybe 1 or 2 don't, but you're ultimately trying to underwrite more of a 2 to 3.5 times MOIC on your money, right? And so it's just, you're investing in companies that are in different phases of their life cycle. Where that I think is informative on the venture side of things is that not every company that receives venture backing is going to IPO or is going to be bought for some massive revenue multiple based on it.
And in fact, a very small minority is the expectation of the average venture investor.
That's right. And so the existence of these private equity groups, many of whom, as you mentioned, are starting to lean left in terms of how early they're willing to invest in companies, and more importantly, are focusing on growth versus profit as a metric,
right.
is really fruitful, I think, in terms of the buyer universe for these venture businesses.
So private equity players are often seen as consolidators, maybe a stepping stone of consolidation before forward selling whatever they end up bundling together. I think a lot of folks in our industry are of the mind that the next generation of major defense players are also going to be platforms and consolidators. We have a bit of that thesis in the Reveal kind of strategic business model and the vision for ourselves. But private equity seems like it's one of those platform creation, bundling, consolidation mechanisms that's well-known, well-trod path. It's liquidity for venture investors on the way to something bigger and more. It seems to me that there's some amount of explanatory power there for private equity's involvement in both the M&A and the IPO market in aerospace and defense. And I'm going out on a limb here, but I think you probably agree.
Yeah, that's right. I mean, there are, especially in this sector, a lot of examples of private equity groups assembling a number of investments, right? So, platform and then a string of add-ons to that, and ultimately taking the 1 + 1 + 1 doesn't equal 3, it equals 8 or 12, right? We talked about Blue Halo earlier. That's the perfect example of that. If you take all of the companies that they bought and apply some nominal growth rate to those companies, you'd be at a fraction of the revenue and profit that they were generating upon the acquisition by AV.
Right.
And so that's intentional. The private equity is backing both management teams and putting capital into investment accounts that allows those companies to go after these big swings and develop new capabilities that can be useful to ultimately the end user, the warfighter, or the defense acquisition professional who is trying to run these procurements, that creating something that didn't exist previously.
Maybe a last question from me, and then Dave and Simon might have some other contributions here, or maybe you'd like to shift topics, Garrett. But it's also a truism that nobody quite knows what the neo-prime kind of exit pathway ends up actually looking like. It would make sense if the 5 to 10 players we expect to emerge as multi-billion-dollar platforms of the future end up IPOing, right? And that there are either direct listings or IPOs that pull them into the publicly traded markets. We saw that with Palantir not too long ago. Everybody kind of expects that to happen with other companies, SpaceX, Anduril, once their boards and leadership teams decide that it's time or whatever. We do think that that's an eventuality. Private equity seems like it's one of those pressure release valves in an industry that looks a bit bubbly right now, right? It looks a bit like a bubble. There have been thousands of venture investments going to defense, pure or dual use companies. Many of those are going to fail. Lots of them are going to trickle along. Some of them are going to win big, but there inevitably will be a consolidation as a resolution and as a pressure release for a bubble dynamic. How do you see that playing out into the future, the next 3-5 years?
Yeah, I think you're exactly right. I wish I could tell you that X% would go public and Y% would get acquired, but yes, some will go public. Many, many more will be acquired. There will be a lot of really, really great outcomes for investors and builders in the sector through acquisition.
Yeah.
There will be below that a churn of, I'll call it consolidation, around companies who maybe have great tech, maybe have really good product market fit, but raised capital at a valuation that ultimately isn't supported in the full liquidity market, right? It's one thing to invest $10 million at a $500 million valuation. It's another thing to pay $500 million for a company. And there's a pretty big disconnect there. And I think that there's likely to be quite a bit of consolidation in that realm. And so we haven't really seen the full wave of that. There have been a handful that have taken place that I would put into that bucket. But over the next 3 to 5 years, if you just carry through sort of your statement around, let's call it a 7 to 10 year life cycle on a VC investment,
right?
We're kind of halfway through that right now, right? And so those are coming due, and you will start to pop in the next few years.
Yeah, I mean, I usually use 2016, 2017 as the start year for this defense tech renaissance. I know there are a number of companies that came out of the ether before that, but those were the Anduril Shield AI years, right? And so we're plus 7-8 years from that. We're right in the thick of that common exit. This is why everybody thinks that the traditional venture template actually won't play out as it did in the SaaS industry over the aughts and the teens, because defense obviously isn't playing out that way. And I guess time will tell. I know I said that was my last question, but last question, and then I'll shut up, because undoubtedly Simon and Dave want to talk, and power to them. But venture multiples, right? Like the easy button was apply the Bessemer 10x forward 12 revenue multiple to private valuations in venture rounds, and that at some level that meters or manages liquidity and exit expectations for founders and boards and investors and all that stuff. But there's no way that some of these venture based valuations hold up into the public markets. There's just no way, right? And what I'm referencing here is somehow Palantir has a crazy revenue multiple on their publicly traded stock, but that's probably an outlier. Anduril is probably, again, trading well above what we think a public market would sustain at something like 25, 30x revenue. And again, these might just be anomalous, magic fairy dusted companies, or however you might put it. But like, how does that resolve? Like, how does the what does that resolution point actually look like between private valuations that are obviously hypey, exciting and hypey, and maybe that's what it takes to get venture investors interested, and the actual realities of M&A markets and public markets?
Yeah. So look, every multiple is essentially just a growth forecast, right? It's a growth and a margin question. And so if I look across the defense ecosystem, there are companies that do provide pure SaaS and have the ability to achieve the same margin potential as their commercial counterparts. The growth question is less obvious, not in the sense that the market is not there, but it's not a question of hiring a bunch of sales guys who are going to close X number of enterprise license deals per quarter. It's just not that same sales cycle. It's more of a stair-step function. So that's a little bit different. And then the other piece is the vast majority of companies who are taking venture capital money in the defense sector are not providing pure software. Right. They are providing some services around it. There is some NRE, there's some metal bending. Some of them, it's all product, right? And it's just, it's a different framework than E2B SaaS, which is a very well-known commodity.
My contention is that nobody really knows how that ends up resolving, and that at some level, investors are betting on domination, monopolistic type plays or oligarchic, rule by the few kind of plays in this market. And those companies, in the same way that the legacy prime contractors, the big five, the big six, are able to remain in dominant market positions and own massive chunks of recurring defense spending, that they maybe can demand those kinds of revenue multiples, but only if they are the one of the small handful of actual big winners. Otherwise, I think the rest of it is hopes and dreams.
Yeah, I mean, if you look at, I guess, my entire lifetime, that's probably a pretty safe bet that there are winners and losers, and the winners win big, and they'll buy whatever they need to. But
that's right. Yeah.
There is a change in terms of the valuation dynamics, right? There are companies like a Kratos or an AV that are trading at a revenue multiple that is well outside where the traditional primes and SIs have traded. And there are likely to be more companies that trade in that environment. Having a Palantir trading at north of 100 times revenue it's just good for the sector.
Right.
There's some, at least, subconscious anchoring mechanism there. And so not everyone's going to be worth that, nor should they, but there is a bit of a change in terms of the valuation paradigm.
Sure. And I mean, this gets me excited as a venture-backed, founder, CEO of a rising company. It means that I might be able to demand pretty exciting private valuations as we grow. And that's
right. Yeah, I said not everyone should trade at north of 100 times, but Reveal should trade at.
Yeah, absolutely. I'll put you in touch with prospective leads for our next round, and you can tell them that. Thanks, Garrett. Appreciate that reference.
Garrett, I've got a question for you. And we're spending a lot of time here talking about the business side of what this looks like, but it seems to me that a huge amount of this is driven by customer behavior, of course. And you mentioned that the seeming like one of the big drivers of this interest looks like DoD trying to adapt how it does business, how it purchases, and how it acquires. But while that is going on, the federal government is going through historic dysfunction in resourcing. And the spoiler is that it's going to get much worse before it gets better. And last year we saw the first ever year-long continuing resolution for defense funding, which ironically, as it relates to like private industry, it means that the executive branch has a lot more flexibility, right? That the executive gets to act a lot more like an executive with its resources when we're in situations like this. And we haven't really felt, I don't think, we haven't really felt the pains of this yet. The traditional primes hate it. They always decry the CR because they are so closely aligned with this 3 to 5 year budgetary cycle. And, when that gets impeded, they feel the pain really acutely the way that the Defense Department itself feels that pain. Your primes, your new startups don't. Right, they are looking for new ways of doing business. They like when the executive branch consolidates 75 contracts into one big fancy vehicle. It starts doing some of this stuff. But I'm looking at what comes next, right? For me as a congressional watcher, I'm looking at FY27 being, I think, probably the real breaking point for the way congressional appropriations goes down for political reasons primarily. Does this start to, in fact, is there a point where we think maybe this starts to affect market interest? I mean, we're talking about like some really peaks and valleys in government spending being on the horizon to the tunes of hundreds of billions of dollars. Is that something that is like being watched or looked at? I mean, like, and to put a fine point on it right now, we're talking about $1 trillion defense budget, right? A tenth, 15% of that, 150 billion, is from reconciliation. That is a non-recurring part of the federal budget. So in a worst case scenario, you could see a 15% contraction in defense spending for fiscal year 27. So not very far from now. Is that a thing that people are watching, or is it just us Congress nerds?
It's absolutely something that people are watching. I hopefully didn't roll my eyes on camera at the $1 trillion defense budget, but
oh yeah, I rolled my eyes. For those that aren't watching,
it's I don't view that as a real thing. I mean, you look at the reconciliation budget, right, and that money's not all getting spent this year, right? It's getting, well, maybe it's getting spent, but it's not all actually hitting books this year.
It's infinite money. And we saw this when Biden did reconciliation, there was a ton of Inflation Reduction Act money sitting on the books after Biden lost the presidency. The Trump administration rescinded a ton of previous reconciliation spending. So there's no like chase mechanism to force them to spend 150 inside this fiscal year.
Right. So, I kind of view that as sort of I think a lot of people are viewing it as multi-year money. And so we'll start there. The baseline is something that people are very much watching. I would say in the space that you are in and that really most of the venture community is in, and private equity as well, you're chasing probably 6 or 7 swim lanes, all of which stand to probably make up a decent amount of the contractor spend, whether it's an up year or a down year. Obviously, top line pressure hurts everyone, although we are now in an environment where, while CRs used to be bad, and they, for industry, are still bad for a number of reasons, a CR with the ability to have new starts and the ability to add congressional marks to it is not quite so painful as the CRs of old. And I do worry that takes a little bit of the pressure off of folks to actually pass a budget. But for industry, it is not quite as bad as it used to be. So, for most of my career, really, we've been operating under a CR. There have been budgets that have passed. Industry generally figured out how to work through it. You started stacking CR upon CR, and it started being really difficult. I would say that industry is a lot more positive now about this current prospect of multi-year CR than it was, 5 years ago. So it's something people are monitoring. There is likely to be top line pressure. It's funny, Simon, you are probably one of the only people who actually is talking about the fact that there's likely to be some sort of reduction at some point in the near future, at least publicly, in terms of folks who are going on podcasts and talking about the defense industry.
Physically impossible for it to not happen. I'll tell you right now, the laws of physics are about to come calling. And the only way in which we see what has just happened sustaining over the next 3 years is if the Republican Party maintains a grip on both houses of Congress, which is not a promised thing. So like if even one house goes away, you're going to see a 15% contraction in the defense budget because reconciliation is going to go away. Whole stop.
Nostradamus. So I hope you.
I'm a very much sky is falling type of guy, which is, I guess I'd much rather be holding an umbrella than stuck outside soaking wet.
So I will question the 15%, right? So let's look back over the last 15 years, right? And so there was a defense budget and there was an OCO budget. and market kind of traded off the defense budget, and OCO was sort of the shot in the arm. Sure. And I see reconciliation as a similar mechanism in this case, where the defense budget, let's look at just the budget, is not declining by 15% next year.
No, the base is not. The base will stay the base.
Right.
But if you treat 1 trillion, and this is the thing that like stresses me out, is everyone else is treating 1 trillion as like the de facto. I'm like, hey, it's not. That's not what this is. And if you treat it that way, you're going to wake up one day to find out you have 850, which is what the base is and what the base was last year. It's flat. So I think a lot of the exciting gains that you're seeing in this like startup space is actually a shuffling of the deck within the base, right? Drones and EW and these folks are doing really well at the expense of parts of the budget we don't look at because we consider them old and boring and not the way wars are fought in Ukraine. That's going to run out, and I bet you it runs out at right around the same time that there is no more reconciliation to like pad the coffers, and it's going to feel like a much bigger pinch than it should because I don't think people are preparing for it.
That's right. There's going to be a lot more bifurcation in valuation and profitability and growth within companies, right? The areas you mentioned and probably a handful more are going to do fine. And then there are a lot of companies who are not going to do fine.
Question from, like a startup founder here. We see all this energy and shift, at least rhetorical, toward non-traditional contractors in defense acquisitions, whether that matures or plays out at the kind of dream levels that folks like me fantasize about or not, we'll see. But if over the next 5 years there actually is a material trend line in the direction of non-traditional contractor awards and work and all of the above, then does it matter for us, the non-traditional set, does it matter for us if the top line shrinks? If the piece of the pie that is going toward the non-traditionals is actually growing?
I would add a different wrinkle, which is that from my classically pessimist point of view, what you're going to find is a bunch of wolves in sheep's clothing when you find out that your crowd of non-traditionals is full of people that you don't consider a non-traditional.
Sure.
So, it grows dramatically, and then you realize that Kratos and AeroVironment and several of these folks that are top 10 valuation like primes at this point,
sure. I mean, it was surprising.
Are now non-traditionals because they're smart.
It was surprising.
Well, not now, right? Like they're not like they will be, right? I mean,
when Forged Act passes and we change the definition of non-traditional.
Not even that. Look at today, right? I mean, to be a non-traditional business and qualify under an OTA as a non-traditional, you need to be a non-cast covered entity. There is no language that says you can't be owned by a prime or a big SI. And I'm not going into names, but there are a lot of companies that have non-traditional entities.
Wouldn't that be great though?
OTAs.
But Garrett, wouldn't that be great? Wouldn't that be a great promoter of the consolidation and M&A activity that we were talking about at the top of the show, right? Like most young upstart non-traditionals, definitively non-traditional players like us and others, wouldn't it be great news if there was a mechanism by which the primes could retain their grip on the industry through consolidation and M&A while conforming to this kind of shift in the trend lines toward non-traditionals by owning a bunch of non-traditionals? That sounds like good news.
Yeah,
maybe not.
Ultimately, I'm a little more removed than you are.
Yeah.
I think most people within government care less about traditional versus non-traditional and care about outcomes. And so,
of course, as they should.
The ultimate proof will be in the pudding. And, you see, look at the SBIR program, and it's the darling, and then it's beaten up for years, and then it's the darling again. And ultimately, it's going to depend on how companies perform and whether you're a traditional or not. If you're putting great product in the hands of warfighters, that's the best thing for everybody, right? And
well, there was some amount of energy to persuade the powers that be that the defense industry needed revitalization, that the legacy players were insufficiently innovative, and whether true or not, that is the kind of the rhetorical vibe shift, whatever. And so if in the act of revitalizing the industry through energizing the SBIR program, redefining non-traditionals, allowing for traditionals to buy up non-traditionals to satisfy the non-traditional, requirements, And in the act of doing all that, you revitalize and you deliver great capability. Isn't that a win for everybody?
Yeah, obviously, delivering great capability is a win for everybody.
Right.
I'll say what nobody wants to say. It's only cool if I win.
Well,
that's
I'll
that's
say-
my going in position always.
Yeah, that it is
I'll
only
say
cool
what no
for
one
the
wants to
audience.
say on LinkedIn, which is that the primes put more money into IRAP than venture capital does into the Department of Defense ecosystem per year. So
Sure. Well,
just to stand up for what I'll call traditional industry.
Won't someone please think of the Boeings? God.
yeah, maybe they could have put some IRAD into the the doors on the 737 Dreamliner.
Theoretically.
But part of the push for non-traditionals was to also take the results of like many years and many billions of IRAD, right? Commercial phones and like, hey, give me your holographic goggles that already have another purpose and the commercial side of things. But tying back to the CR, that's part of the problem with the CR. Like I understand, like, okay, we're in a softer CR environment, but the PMs still have the same set of problems that become frustrating to the type of vendor that we're trying to attract into this ecosystem, right? They still lack predictability. They still have to produce things on the same timeline, but lacking that predictability. Like if you were one of those vendors that has literally best in class whatever, why would you even bother doing business with the Department of Defense?
Agree. I think we said a couple of weeks ago, like the defense national security business for Microsoft is a sliver of their overall business. Like, what motivation do they have to actually like build bespoke stuff? Well, they don't. And the DoD buys their stuff regardless, and they don't really need to market it all that hard because it is what it is. Although they are seemingly wrapping up the market for VTCs and teams and collaboration and stuff. And I think that is intentional. That's an intentional long-term capture strategy by the Microsoft National Security Division, or whatever they call themselves. Fellas, it's been an energizing, awesome conversation. Garrett, it's a pleasure having you on, a voice of reason to moderate our extreme tendencies on the pod amongst the co-hosts. Dave, welcome back from the wilderness, and Simon, keeping the beautiful pessimist that you always are. Does anybody want the last word? We've got time for a last word. Garrett, we'll give the honors to you unless you want to hand the mic off to one of the others.
Tropic Thunder is the best Tom Cruise movie.
Thank you for bringing us back to our roots. Thank you.
Wow. It's a great movie. Sorry, last word. All right, I'm gonna another time. Garrett.
It's not the best Tom Cruise movie. It's a great movie. It might be the best Tom Cruise role or character.
Okay.
I'll give you that.
We're all fighting next time I see you.
All right.
You know what Tom Cruise has that almost nobody else does in movies? He can run, man. The guy can run. Like, that's why he runs so much in movies. Because
It's a perspective trick. That's all it is. His legs are so short. He's barely moving.
I remember watching a movie with, I won't even name the actor. I feel too bad, like shit talking somebody. And but I remember watching this movie. I was like, oh, this guy's ruggedly handsome. He's like the perfect action hero. And then I saw like a half-second glimpse of him running down some like smoky corridor. And I was like, oh, that guy runs like a fucking idiot. Like, Jesus. Anyway, it totally undermined all the heroic qualities this guy otherwise brought to the screen with his chiseled jaw and deep notch in the middle of the chin and all that stuff. I might as well have just described Dave. All right, everybody, thank you for not the running, Dave. I've seen you run. You're a beautiful runner.
Not built for that. Not built for that.
I've never seen Dave run, but I know for a fact that man's not running.
You would be 100% correct.
All right, we're going to try and track down some videos so the listeners and the rest of the audience can view some. What's that? There's like a YouTube video of like 40 minutes of Tom Cruise running from all the scenes he's ever run in every movie. It's all compiled together. We're going to do one of those for Dave. All right. All right, everybody. What's that?
Put it in the notes for the pod.
We will. Yeah, put it in the show notes, Ian. Links to Dave running on YouTube. That would be great. Okay. Again, thanks for joining us this week. Look forward to seeing you next week. Make sure you follow us on the socials, podcast platforms of choice, YouTube, and elsewhere. Refer us to your friends. Leave us a rating and review. Helps people find us, helps people join this community. And look forward to chatting again next week. And next time you're on, Garrett, it'll be great.
Awesome.
See you, everybody. All right.